Welcome to the most important podcast of your financial future. Today, we're going to teach you how to lose money. Pay attention, because these are the most valuable lessons you'll ever learn about creating wealth. Let's get started.
Initial jobless claims this week, the week of March 25th, 2020, rose to 5 times their record level in U.S. history. Hi, welcome everyone. I'm Paul Moore.
And I'm Josh Thomas. How to Lose Money is a podcast where we discuss defining moments of success through distinctive stories of failure with business owners, investors, and entrepreneurs.
Today, our guest is Neal Bawa, who's going to tell us how to lose money by not being prepared for the apocalypse. Hey, Neal.
Hey there, Paul. Great to be back on the podcast. Thanks for having me.
Yeah, this is a special episode, and Josh is going to take it from here and tell us what is going on in our show today.
Normally we kind of go through a single failure and we extract some lessons from that. But at this moment in time in history, the entire planet is struggling with the same thing, with the global fallout and the economic impact of the coronavirus. And so there are a lot of health issues and health concerns, and there are also a lot of economic stability concerns, and everybody's running around like crazy while they're sheltering in place, of course. But there's a lot of questions and not a lot of answers. And so we're bringing Neal on to kind of talk about this a little bit. And so Neal, we'll kind of dig into this a little bit in a second, but just kind of give us, if you were to sum this up in one sentence, what's happening right now?
I think it's a failure amongst every nation on earth to anticipate a pandemic. People call this Black Swan. I say it's a failure to anticipate a pandemic, given that this is not the first one.
Well, and so we're gonna kind of dig into what that means to us here in a minute. But Paul, tell us a little bit about our guest today. Somebody that's a well-known good friend to both of us.
Yeah, Neal Bawa is the mad scientist of multifamily. Besides being an entertaining speaker, Neal Bawa is a data guru. He really is. A process freak and an outsourcing expert. Neal treats his $200 million multifamily portfolio as an ongoing experiment in efficiency and optimization. The mad scientist lives by 2 mantras. His first mantra is that we can only manage what we can measure. His second mantra is, see rule number 1. I'm just kidding. His second mantra is that data beats gut feel by a million miles. These mantras and a dozen other disruptive beliefs drive profit for his over 500 investors. Neal, we're so glad you're on the show. Before we jump into this, I just finished a mastermind call with some of the smartest multifamily guys in the country, people we would all know, including Michael Blanc and Reed Goossens. What do you think is going to happen if you had to predict? It's so hard, but if you had to predict what's going to happen in your $200 million multifamily portfolio, what do you think is going to come down in the next few weeks? You can just give a succinct answer there.
So I've got some early indicators, and I'm going to use that early indicator. One of our properties floated a $75 early payment. If you pay your payment early, we'll give you $75.
Yeah.
And I would have predicted day before yesterday that only about 20% of the payment, the tenants would take me up on it. And I was stunned to see that 70% of the tenants basically took that option. Stunned, right? So if anything, I have been more bearish than that. So I was surprised by that. So we rolled that plan out 30 minutes ago to every property that I had, but it gives me more hope than I had yesterday. It gives me more hope that tenants will pay at least the April rent. I'm more worried about April rent than May rent, because in April, they don't have any of this free money from the government, right? So at this point, if it's a family of 4, they get $3,400 from the government. The government saying they're going to get it there by April. I don't think so. I think it gets there by the end of April, because the Treasury Department says end of April. Politicians say beginning of April. So I know who to believe. And so to me, I think that the impact on our portfolios in the short run is going to be fairly devastating. There's no easy way to sugarcoat it. But throughout this podcast, I want to keep pointing out that we cannot compare this to 2008, 2001, or anything else out there. The easiest, the best, the simplest way to compare it is there's a hurricane, it's a category 5, and instead of hitting one city in the US and shutting it down, it's shut down 50 states or close to 50 states at this point. 1/2 of our population, 51%, is now in shelter in place or quarantine. So it's essentially shut down half of America and heavily damaged the rest of America, because even all of those places have social distancing going on. And as a result, what is actually happening is that we have frozen the American economy for the months of March, April, May. Some people say 3 months. I think it's 4. So
some people say 12 to 18.
True, but I believe that technology and innovation is going to kick in, and we're going to be able to partially restart the economy, and we can talk about those as well, because the problem is the media knows this. If you give people good news, they tune out. If you give them bad news, they keep watching. So what I've seen is
very good point.
Media has a very strong tendency. If you look at CNN, I mean, 95 of their articles are about the bad news, but they don't share the good news that is also happening at the same time. For example, did you know, Paul, that the FDA yesterday approved a very simple 60-cent 3D printed device that you can attach to just about any ventilator, and it turns it into 4 ventilators?
What?
It's
I didn't see that on CNN.
3D printed device. You plug it into a standard ventilator and you stick in 4 hoses instead of 1. 1 ventilator is now 4 ventilators. The FDA approved it as an emergency approval, of course. But at this point, isn't it better to have a small chance of malfunction where 4 people could be saved instead of 1? So that's good news.
Yeah.
That's innovation at work. So keep in mind that America is unquestionably the most innovative nation on earth. So to me, I think that the long emergency is 4 months, and it's March, April, May, and June. And by July, we will figure things out. Did you also know that we haven't found a vaccine yet? We will find it at some point, God knows when. But we found something that is actually very powerful. We found a way to test to see if you're immune. And we found a way to do it for $10. So I believe that by July, we will have tens of millions of tests where you take a test, it's a finger prick, and it tells you if you're immune. And if you're immune, then you can go back to work. And if you're a healthcare professional that's immune, you don't need the masks anymore because you're immune.
How are you immune? I mean, I get it that you can have a higher level of immune system function.
Oh, you've already gotten it, not shown symptoms. So keep in mind that 60% of the people that get this don't show symptoms. And if you got it, didn't get tested during the 15 days that you had it, then you already had it and you don't know. Right? And you didn't show any symptoms. So you are never going to know unless there's a test that shows you, that pricks your finger and says, this guy has antibodies for coronavirus in his bloodstream. Therefore, not only is he immune, but for the next 6 months, he cannot distribute the virus to other people. That's good news.
They think.
So correct. All of this is conjecture, but some of these things are happening. This device that I mentioned, the 3D printed device, was invented by a hospital system in one of the most affected counties. And so I'm pointing out that human ingenuity and American ingenuity will kick in over the next 4 months. So I think this is a 4-month hurricane. And I don't want to call it a category 5. I'm going to call it a category 6 because nothing like this has ever hit us.
Absolutely.
And so to me, the big question is, can we survive the next 3 months or the next 4 months? And I think that the stimulus bill checked off a bunch of boxes there. I do think that, I have to say this, have you ever seen Congress move this quickly? I mean, they didn't do so in 2008. They had a very tiny bill in the first few weeks, and then it took them a few months to come up with the next step. But this bill, they started working on it 14 days ago. And today it's likely to get the president's signature. So I think that I have to say, and I'm usually very nasty when I talk about Congress, but in this instance, I think they've done their part. The other thing is, I mean, if you look at the Fed, instead of doing what the Federal Reserve always done, which is kind of stagger and slowly move on steps, I think they threw the kitchen sink, they went around the house, they ripped out all the other sinks, they ripped out all the plumbing, and they threw it all at once because they realized that this thing is different from every other enemy we've ever had. And that is because, and I want to state this is, I think, the most powerful thing that I've learned about the coronavirus. Human beings think in linear terms. 1, then 2, then 3, then 4, then 5. So by the time we get to 5, the virus gets to an astonishing number because the virus is not linear, it's exponential.
Right.
Which means it goes 1, 10, 100, 1,000, 10,000. So in the time that human beings have gotten to 5, the virus has gotten to 10,000. And I believe that the people that understand the exponential function are the people that fought these kinds of pandemics before, Ebola and SARS and MERS. Those people keep drilling it into the politicians that you cannot react normally because this thing grows very fast. So imagine an adversary that was fighting you in 40, 50 countries 2 weeks ago, and then it was 100 countries, and then it was 150, and now it's 193 today. 193 countries. And in each country, it doubles every 3 to 7 days in size.
Right.
So you're fighting Godzilla, only Godzilla is twice the size in 3 days, right? Mm-hmm. And in some parts of the US, twice the size every 2 days. Yeah. So I believe that we are beginning to understand that, and our response rates are improving as a result of that. And that's why we have Congress that's passed a law in 2 weeks.
Right. So I was on the phone with a friend from Shanghai and Hong Kong the other night. We had a conference call, and they said that we're crushing the U.S., and they're both Americans, by the way. They said we're crushing the U.S. here in China as far as fighting this because, number one, 99, and this is their number, I don't know if it's true, 99.999% of the people are wearing masks and really social distancing. And second, we built 2 hospitals in Wuhan in 10 days each. America can't even get an architecture plan, a permit in 10 months, far less 10 days. What do you say to that, Neal?
They're right. I think that their point is well taken, that's what China did. My point is, do we need to be that fast to avoid apocalypse? And the answer is no. That our chart already, if you look at our curve upwards, is passing China where it was at the 80,000 point. They didn't go beyond 80,000 because it just abruptly slowed at that point for them. We're passing that point. So it's not like we're going to end up with 80,000 infections. We might end up with 250,000. We might end up with 400,000. Point is, that's not the apocalyptic point. We actually have more time for a number of reasons, and we are reacting. The other thing is that if we end up doing ingenious things like turning, every ventilator into 4, that buys us more time. So we are doing things that will buy us more time. Are we doing it as well as either China or Hong Kong or South Korea or Japan? I mean, these are the 4 leaders. These are the people we have to learn from, right? South Korea for sure. But, Japan, you look at them, they're doing really, really well right now. I mean, I built a website because I'm absolutely fascinated, and it's a morbid fascination, by the way, with this thing. So I built a website from scratch called coronavirusrealestate.com. And on this website, each morning at 8 o'clock, I publish the daily growth rate for 8 countries in the world, us being one of them. And so what that website shows me every day, I mean, I have a virtual assistant that updates it in the morning before I get up. And so I go and look at that, and it shows me how every part of the world is doing with this. And oddly enough, I'm more bullish that we will beat this thing than other people because I have access to this data. So, I'm going to read off some of the numbers that are on there for today, right? Because it's been updated for today. So the United States has an average daily growth rate of 28.7%, a 5-day growth rate in infections. Italy is down to 9.6, Spain is down to 18.1, South Korea 1%, Iran 6%, and the United Kingdom is down to 18, Germany down to 13. Here's what I can tell you. Here's the good news. In every single case, all the numbers that I've mentioned to you, those 5-day rates are lower than the 5 days before. All 8 instances, and none of those include China, by the way. All 8 instances, the 5-day rate is lower than the 5 days before that. And here's the real good news. The 1-day rate yesterday in every instance was lower once again than the 5-day rate. It's already slowing, but we can't see it because everyone is just looking at the number of cases. Everyone's looking at number of cases. And I'm telling you, Paul, the number of cases is not relevant. It will always grow faster because it's infecting more people. You know what is important? The only number that's important is what is the growth rate? It's daily growth rate. Because if it stays at 25%, it's going to kill us all. But the good news is our 30-day growth rate is 33%. Our 5-day growth rate is 28%. Our 1-day growth rate is 24%. So even though the US is doing a piss poor job compared to all of the other countries that I just mentioned, it's slowing at the same rate. So anyone that thinks that social distancing is not working is welcome to go to coronavirus real estate. There's no form, by the way. We didn't. This website doesn't capture your information. It was never designed for that. Just go there. The graph is right there, right? Go there, scroll to the graph, and look at it. The data is very clear. Social distancing works, and it appears to be working at the same rate in all 6 countries. With actually all 7. South Korea is an odd one out, because they do things differently. We cannot use them as an example. But Iran, right, where Iran's daily growth rate was so much higher. It was 53% on March 1st. Today, it's dropped to 9. Even the United Kingdom, which we've loved bashing, was as high as 41% on March 5th. Today, 18%. Point is, I came on this show, and by the way, I was the gloom doom guy posting videos on the web 4 weeks ago saying this is much worse than people think, and it turned out to be much worse than people thought. But I'm also pointing out today that the data today is not showing gloom and doom, right? Watch my video on March 11th, and you're going to say, Neal, you were just horribly gloom and doom. My point is, in the last 15 days, the efforts that we've made are bearing fruit, but no one can see them yet because you're not tracking the daily growth rate. And this chart tracks it. Every day, the United States daily growth rate is there. It's dropping for sure. And what's nice is it's dropping for every other country as well. This methodology unquestionably works. And based on this, we will peak within the next 30, 35 days.
So let's kind of thank you for that. It's great to have a clear perspective and to have just data and science to back something up. I really appreciate it. It's very difficult to get any reliable information because we all live in our own echo chambers to a certain extent. So let's talk about 2 things. Neal, you are anticipating that we have 4 months of serious fight ahead of us, and then we have a period of recovery after that. So my question is, if you are a business owner or an investor, which is the vast majority of our listener base, if you're a business owner or an investor, what are your recommendations for the next 4 months? And what are your recommendations for that recovery period that comes after?
Depends on your beliefs. The data tells me today that we are going to beat this thing. And I didn't have that data to support 10 days ago. I mean, if you actually look at that chart on that website and scroll up 10 days ago, you would have seen why I was so depressed and why I didn't think that we would beat it. But the last 10 days of data shows that we are going to beat this thing. And yes, it'll come back and we'll have partial shutdowns. This is very much a 2 steps forward, 1 step back thing. But if you are like me and you believe that over the next 4 months, this is going to resemble the greatest hurricane in history, well, then the rebound from hurricanes has always been very quick. Whether it's tourism, whether it's travel, it rebounds from these sorts of events has been quick. Yes, this is different in that it still will be infectious back by then, but we will have taken a number of other measures. I absolutely believe that between now and the end of June, we will find a number of methods that we don't have today to slow this thing down. Not to kill it, but to slow it down. And I mentioned some of those. One of them is the plasma transfusions. If you take plasma from people that have been infected, they have antibodies. You inject them into somebody that's sick and is in a hospital, they recover much faster, right? We will find people who will donate their blood, and we will inject plasma into people. I expect that by the end of June, we'll have hundreds of thousands of people being treated using plasma. And by the way, that is a proven methodology because it's not new to coronavirus. We've used plasma infusions before. We've just never had the need to use them at a mass scale. So going back to me looking at this as a 4-month hurricane, I see Q3 as a time when every kind of real estate asset is likely to have lower prices. Why? The commercial market is freaked. I mean, at this point, it's freaked. You might think that interest rates are low. They're not. Take a look at what's happened to interest rates in the commercial market over the last 10 days. They've gone up. They've gone up at a great deal.
I know. It's true.
And also, Fannie Mae and Freddie Mac are putting brand new restrictions on us, including requiring 12 months of mortgage and insurance as an impound, which means that for a $20 million project, we now have to raise $1.2 million more in equity.
$1.2 million?
$1 million, somewhere in that range, for a $20 million project.
To point out, I think the Freddie and Fannie, they expanded the rates because of the extra risk premium, right?
Correct. I mean, at this point, Fannie and Freddie are freaked out themselves. They want to make sure that they do not go into a receivership, right? So the government took them over in 2008. They're afraid of going into receivership. So they're taking aggressive steps not to fund stuff. So the credit markets, especially when it comes to commercial real estate, are sort of frozen, right? So everything's slow. Loans are not going through. 50% of deals are being retraded. And a large number of people are just walking away, even with their earnest money lost. So the markets are in flux, and I don't expect that to change. Remember, this is the hurricane. In the middle of 100 or 200 mile an hour hurricane, how many transactions do you really do? That's what's happening. We are in that 200-mile hurricane. There's no I in this hurricane. So everyone's in that process. That's where we are. My point is, you still have to look at it as a hurricane because when it passes, it really will pass. I have no doubt that we will find ways of bringing our workers back to work and still reduce the impact. And there will be people still dying in June and July and August of this. I have no doubt in my mind. But by that time, its impact could be closer to the flu. Today, of course, if we treat this like the flu, it's the end of the world, right? Yeah, right. So the math does not allow us to treat it like the flu today, but I think that we will find ways of doing that 4 or 5 months from now and restarting the world economy. I think this is not a planned shutdown of the U.S. economy. People keep saying that, and I keep pointing out to them, this is a planned shutdown of the world economy. 1.3 billion people in India went into quarantine today. And you know how harsh their quarantine is? Every 2 days, they have 3 hours to leave their houses, buy grocery, a siren goes off, they have 3 hours to leave, and a siren goes back on 3 hours later. And if you're caught on the streets while you're in curfew, they immediately put you in jail.
Wait, is that the same 3 hours for everybody, or is it rotating?
It's rotated for different parts of the city, so you have time to go out, and not everyone's kind of rushing out all at the same time. And India is also, keep in mind, people don't go to the supermarket in India. There's these vendors that come outside of your house, so it's less of an aggregation issue than the U.S. So it wouldn't work here in the U.S. to do that. We would have to do rolling hours, right? So the point is, on March 11th, when I released a video saying the United States will go into quarantine within 30 days, I have never been laughed at so much. I mean, if you go back to the YouTube video, the people that were laughing at me were ridiculous. They thought that I was a total idiot, and they made it political. Like, I'm actually a very apolitical person, but they made it very political. They said that you must be a liberal Democrat because you're saying this, and it's like, no, I'm a data scientist. There's a difference, right? Yeah. So to me, the math was very clear. Now, 15 days later, 50% of the United States is under an effective curfew. And the remaining 50%, it's not at this point a doubt as to whether we go into curfew. That is a given. It's a question of when. And it makes sense, right? So I'm one of those people that says you shouldn't put an entire country into curfew. Don't do that. Roll the curfew as you need because not every state is in the same place. New York is in a completely different place from Idaho. So in a different Excel spreadsheet, which I intend putting on the same website, we're now tracking US states and their daily growth rate. Because doesn't that make sense, right? To track to see where's California. And I can tell you, of all the states in the US, the one that is now in the best place is actually Washington State. It's the only state where the daily growth rate is under 10% a day. Why? Because they started this, right? It was where the first epicenter, they were the first one to control, they were the first one to tighten. And so at this point, they're better off than every other state in the union, Paul. And that makes sense. Whoever starts first, ends first. That's what we've seen so far.
Right.
So Italy is at 8%. I expect the US to be at 8% 2 weeks from today, right? So and our daily growth rate for yesterday was 24%. 24 to 8 seems like a long way, but keep in mind that 2 weeks ago, Italy was at 24%. So it takes about 2 or 3 weeks of quarantine to drop from 24 to 8. And at 5%, you can start treating it like the flu. You know why? A 5% daily growth rate also has to keep in mind that 5% of the people that were sick are no longer sick.
Right.
Were infectious and are no longer infectious. So you're just replacing people on hospital beds, not having to run and find more hospital beds. So a 4% is better. A 4% level is actually sustainable. The world will actually figure out how to do this math, put it on a website, and start to restart our economies. We are going to play a dangerous game, and it has to be played, of kickstarting the economy knowing that our infection rate will increase. But we're going to figure it out.
Right.
I have no doubt in my mind that someone will come up with a formula, put it on a website, and say, here's how we're going to restart the economy.
Maybe it'll be you.
Oh, God, no. I think that the CDC has marvelous, people that have dealt with exponential functions. So going back to the original question, though, I think that Q3 is a recovery quarter. I think Q4 is also a recovery quarter. The only thing that I would like to say is that I am beginning to see people seeing real estate back where it was in February. People are saying, well, by Q4, we'll be back there. Paul, that's not possible.
No.
Because the world economy is taking a $10 trillion hit. You can't be back to where you were. You're still going to go back to maybe 80% of where you were. Right? So going back to where you were, that's 2 years out.
Right. Oh, at least.
Maybe 3, right?
What do you say, Neal, to people who maybe either invested in property now or are considering investing that are kind of scared?
My honest answer is this. You do not have better alternatives. Your choices are actually restricted. And in an odd sort of a way, real estate is actually showing to you why it's superior to the stock market. If you're in the stock market, depending upon which day you look, you've either lost 30% or 40% of your money.
Right.
At this point, for the month of March, I have the same net profit in my communities that I did last month. The same net profit. Nothing's changed, right? Now, things are going to change next month. I know for sure. I'll have higher delinquency. I'll have lower payment. But also keep in mind that it has been proven. It has been absolutely proven. And you will see this in 30 days. And call me out on this if I'm wrong 30 days from now. Beyond food, rent is considered to be the second most important thing that people apply money to. We are about to give a family of four $3,400.
What about Netflix?
Oh yeah, that's right. So now we're at number 3. Paul is completely correct. So it's food, Netflix, and then rent. I stand corrected. But good news is Netflix is still going to be only $10 a month next month, right? So we've got some money left for rent, Paul. So great point. So to me though, I think that we are not going to change people's fundamental opinions of what is important simply because of this event. I know it's a catastrophic effect. People will still apply some of the money that they're making, and they're making money in 3 different ways, keep in mind, right? And now I'm reading off the stimulus bill. Number 1, we're sending them $3,400 for a family of 4. We're sending them, about, $2,400 for a family of 2. So they'll apply some of that rent. Second, there's unemployment insurance, which is the largest expansion of unemployment insurance in the history of the world, because we're not the only ones doing it. The Brits are doing it too, right? The French are doing it too. So there's 4 months of unemployment insurance. And the third way that people are going to benefit is that $250 billion is going to be given to companies that were laying people off. The airline industry, the cruise industry, the hotel industry is receiving a separate $250 billion injection, and that injection will get to them in early April. I don't believe we can distribute money to 300 million people in April. That's just, it's an impossible task. But I do think that we can distribute money to 2,000, 3,000 businesses at risk very, very fast. And so that injection of $250 billion into distressed restaurants, distressed hotels, and distressed cruise lines and airlines and airports, that's very quick. So 3 different ways money is going to get injected in. And I think that, roof over your head, which is multifamily, or roof over your stuff, which is self-storage, is going to be high up in the list for people.
Well said. So if I can kind of summarize, we really need to, hunker down during the hurricane. And then when this starts to blow over in the next 4 months, let's say June or July, that's when we come out and start rebuilding. But have conservative expectations that things aren't going to be back the way they were for a couple of years.
Correct. But I do think that there's going to be a point 2 or 3 years out where the impact of this will have, gone to net zero. And I think maybe 2 years out, maybe 3 years out, who knows how many years out. The impact of this is a catastrophic event, and we will get over it. We will get through it and move on with the world economy, and we'll find ways around it so that it doesn't impact us as much as we think. I think that the worst case scenario that has been mentioned a number of times is too bearish. And keep in mind that people were predicting in 2008 that the Dow Jones would go all the way to 2000. It stopped at 6,500. People were predicting that home prices would fall 70%. They actually fell 29%. The problem is people do not keep 2 things in mind. Number 1, mentally, people adjust. Number 2, institutions, whether it's the Fed or Congress, also adjust. And as a result, the whole economy, once it's given a certain amount of time to adjust, will find ways. That is my belief. And I'm already seeing, that happen. We are talking about Italy being a human crisis, and it is. I mean, they had 800 people die yesterday. But they've also gone from 24% infection rate to 8%. Just check out the Excel spreadsheet. And they've done that in 2 weeks. Between March 10th and March 24th, their daily infection rate went from 24% to 8%. It's possible. And to be honest, we can say we're not as good as China at this. I think we're better than Italy. Have you been to Italy? That place is chaos. Yeah. I think we're better than Italy.
Neal, just kind of final questions here to wrap this up. If I'm a new investor, or I'm a new entrepreneur, or a new business owner, is now the time to start something, or is Q3 the time to start something, or what do you suggest if we're trying to get into the game? Should we do it now or wait?
This is the best time to get started. Q3 is not the best time. Q4 is not the best time. This is now the best time. Some of the greatest companies in history started in the worst times. Look up when Microsoft started, and look up when Apple started, and look at the conditions that happened then. This is a great time to get started.
Why don't you tell us quick? I mean, do you remember?
Both of them started during the oil crisis in 1976, when there were tens of millions of jobs lost. And it was a very scary time, right? Because we thought we were going to go war with with Saudi Arabia over oil. So it was a very scary time, but those companies started then. My point is, starting today has no downsides.
Oh no,
has no downsides.
Totally agree.
Right? And you never had that. You didn't have that in February because you were thinking, the market's too high for me to start. Well, nothing's too high right now. Right?
So we're all very close to Michael Blanc. We all love Michael. Michael and I were just talking about an hour and a half ago, and he said, and as I've heard from other people, that the coaching programs out there have just dried up. And Josh, this is very close to home for you as well. wouldn't this be the time to get the coaching, get the training, listen to the podcast, read the books, and be ready for the second or third quarter?
Absolutely. I'm not sure about the second quarter, but the third quarter will represent quite possibly the best deals you've seen since 2014.
Or maybe ever.
Yeah, I mean, well, I'm not sure about ever. I don't think that this event is as catastrophic as 2008. So there's no credit freeze in the market right now because of the liquidity being pumped in by the Fed. But I see a substantial opportunity. But I'm not surprised with what Michael is saying, because that is just a mental reaction. People say, oh, bad things are happening, so I don't want to invest in my education. And they're doing it at the exact wrong time. So I think that's just a mental attitude. Right now is the best time to finish your education and get into the game, because you can actually call a seller in Q3 and get a phone call back. You can call a broker and get a phone call back.
Right.
You can make 10 offers and have all of them be low balls and still be in 3 best and finals. None of that you had a chance on. You can go. Right. You can make an offer without earnest money. Have we been able to do that recently? We can make an offer without earnest money going hard on day one.
And for those of you who don't know what Neal's talking about, it's been the case for Neal and our company and everybody else trying to buy multifamily for at least 5 years now, that there were investors putting, let's say, $1 million down, non-refundable.
Yeah.
The day they make an offer, and they're beating the socks off of everybody else, because that's before they do any due diligence, and due diligence is a formality. Well, that's all changed already in just 2 weeks.
Yes, absolutely changed. And no one at this point is looking for money to be hard. You're going to have sellers give you 30 extra days, maybe 60, to raise money.
Right.
So, I mean, you've got such an incredible number of advantages in Q3 of this year compared to Q1 of this year that if the world was a logical place, Michael Blank's program would have twice as many people today.
Yeah, that's right. And so for those of you out there thinking about getting some training, I want you to call Josh Thomas right now. Josh at joshthomas.net. And I want you to also call Neal Bawa. Neal, how do people get hold of you?
Multifamilyu.com. That's multifamily followed by the letter u.com. We are very committed to talking about this and doing different things. So we did 2 webinars this week, and we had 500 people each. Unfortunately, we can't have more than 500 because our Zoom license stops at 500. And then we have a town hall on Monday where we've called in experts. We've even called in people from the ground. So we have a person that's in New York that is running a critical care facility there that's going to be talking about what he sees on the ground. And so that we have a town hall on Monday. And then each week we're going to be doing a separate webinar on one aspect of this crisis. And next week we're going to be drilling down into the $2 trillion stimulus bill. So all of that, multifamilyu.com.
Very good. Neal Bawa, timely and potent message. Thank you so much for sharing this. We are recording this on March 26th. It should be published by Monday, the 30th, 31st, something like that. So very, very timely and relevant information. And, just kind of final thoughts, what do we, obviously in Q3, we're looking for opportunities. What do we do right now?
Don't freeze. Study. Build your broker relationships. This is not the time to freeze. You already did that back in 2009, and then you kicked yourself over it for the next 6 years. Do not repeat that mistake. Right? Stop looking at this. There's blood in the water. There will be blood in the water in Q3. I promise you. You can either be a shark or you can be a tiny little fish.
Yeah, and as you know, Neal, I'm writing a book called Warren Buffett's Rules for Real Estate Investors. And of course, one of the second most famous axiom from Mr. Buffett is, be fearful when others are greedy and greedy when others are fearful. And Howard Marks wrote a great book that Neal and I think you and I both read, Mastering the Market Cycle. And Marks says, if not now, when? And a reporter said, wait, you mean you're selling right now, right? This was
buying.
2008. And he said, what? I'm buying. If not now, when? And
yes.
Howard Marks made billions from
that. And I want to leave you with this thought. So I want to tell you about the stock that I purchased that I purchased yesterday, and the stock is called Royal Caribbean Cruise Lines. And I have studied cruise lines for a while, and I know that they're going to have a bloodbath this year, and I know that they're going to have a bloodbath next year. Right. But this stock delivers a massive amount of profit every normal year. And a year from today, or 2 years from today, or 3 years from today, when it goes back up, it's down 78%. This is the time to buy.
Wow. Strong stuff.
Absolutely true. Howard Marks, just to kind of just round that thought out, he said, do not wait till it hits the bottom. Because if everybody knows it hits the bottom, everybody's going to take a deep breath and say, well, hold on, wait. Maybe I don't want to sell. Maybe I don't want to take a discount. You've got to, and I think you all know this term, catch a falling knife.
Yep.
Anybody can pick up a knife off the floor without getting cut, even a child. But it's very hard to catch a falling knife. And that's what we're going to see in the third quarter. I completely agree with you, Neal.
Yeah. Excellent. So, Neal Bawa, to learn more and keep in touch with all of the updates about the coronavirus, you can go to coronavirusrealestate.com, which is updated daily with what's happening in the world and how it's impacting. There are also several videos with some commentary about how this will impact your real estate portfolio and business in general. You can also learn more about Neal's multifamily education by going to multifamilyu.com. Thanks again so much for joining us, Neal. We're going to wrap up here. Paul, any kind of parting thoughts before we wrap?
I think I already gave them, my friend.
Very good. So stay safe out there. This is our kind of special edition of How to Lose Money. And, don't be too scared. Don't hunker down too much. Get out there and make the most of this opportunity so that you don't kick yourself later.
And Josh, I do have one more comment. How do people get hold of you if they want to get some good training on multifamily and commercial real estate?
Sure. So you can reach out to Neal. He has a website, multifamilyu.com. And then we were talking about Michael Blanc earlier. If you're interested in discussing anything related to Michael and his training, you can reach out to me directly, josh@themichaelblanc.com.
All right. Thank you so much, Josh. Thanks, Neal.
Thanks, guys. This was fun.
It was fun. We'll see you all next time at How to Lose Money.
You've been listening to How to Lose Money. To ensure that you never miss an episode, subscribe to the show on iTunes or your favorite podcast player. Have something you want to share? Send us your comments, stories, and suggestions to howtolosemoney.com, and we'll consider them for a future episode. Until next time.